So today I've got a couple of stories to show you guys, and I cannot believe what's happened with one stock in particular and the drop that it's just recently had, and we'll get stuck into it. Just to let you know, yesterday the microphone did not work again, so I'm hoping the third time now it's going to work, so we'll see what happens. Obviously you guys will know, and I will know after I've recorded this video if it worked or not, but let's get stuck onto these stocks. So Amazon, I can't believe what just happened with Amazon. I was shocked to see the share price movement in Amazon. So obviously they had a pretty good day yesterday, and then the stock brought out its earnings, and look at the jump that the stock went on. It was up like 11%. It was a Meta-esque jump on the Amazon stock after they reported earnings, and then it gave some of it back, but look at the drop that it went on, and the stock basically, it's gone negative. The stock is, in pre-market, has gone negative. So you've gone from an 11% drop to a 1% drop. It's a 12% swing on the day, and I personally, for me, like, I saw the Amazon bring out their results and I saw the jump, and I went to bed, and then I woke up this morning and I thought, okay, I'll just have a look at these Amazon numbers now. And obviously when I went to go look at it, I had to blink a couple of times because I was like, hold on, you're telling me I went to bed last night and the stock was up 11% and now it's negative when I wake up in the morning? I thought, what's happened in the conference call? Something must have gone terribly wrong in that conference call. And I had a quick look at the numbers, and I was like, the numbers look really good. I'm really happy with the growth that they were having. Obviously, the big thing that everyone's trying to work out is what are Amazon going to grow at going forward after all this demand that's been pulled forward. But, you know, profitability was good, the revenue was good. So I thought, right, we're going to have to dig into here what's going on in this conference call. And I found the exact point where it would have dropped. And actually, shout out to someone in the Discord as well who actually pointed this out as well, that made it a little bit easier. And they basically said that they have seen weakness in Amazon Web Services, and it's going to be lower than where it was in Q1 by 500 basis points. So this was the cause of the drop. Now, why is that key? Well, the thing is that Amazon Web Services is viewed as the most important part to Amazon going forward. It's going to be the revenue driver going forward, and also it's going to be the profit driver as well going forward. So the fact that they've seen weakness there, and they opened up about it, obviously that's going to send the stock down. So that wasn't great. Now, I thought of this from a point of view is like, should the company have been so honest about that? Or is it good to see honesty that they were open about it so early? Or was it a bit of a negative where you're like, well, we're only in April, and potentially by the time, you know, Q2 closes and you get the likes of May and June in there, will you see a rebound? Is it something that you should have said, hopefully we'll get the rebound by the, you know, the back end of the quarter, and it doesn't look as bad by the back end of the quarter? I was weighing up at that, thinking, was this a great decision by management? Was it good that they were honest, or was it bad that they were honest about it? And potentially they could have left it a couple of months and let the shares have the day in the sunshine, and then deal with that issue maybe a little bit further down the line. So I don't know, what do you guys think about that one? I thought it was an interesting point of view, but I had a look at the earnings. I thought the earnings were actually really good. So considering I think Amazon Web Services will sort itself out once it's out of this economic situation where companies are being a little bit more cagey about their spending. We're seeing that in the likes of like cybersecurity spending as well. Companies being a bit more cautious about spending in the likes of Amazon Web Services, the likes of cybersecurity. I think in the long term it'll be okay. And I generally looked at these results here thinking these are pretty decent results, and if the stock's going to stay flat here, I'm actually over the weekend going to have a full look into the earnings and see if I'm happy with them. Maybe run a few numbers and see where we're at, because I thought it still should have gone up even with that little bit of weakness in the Amazon Web Services. Like you can understand a bit of weakness with the environment that we're in. So I'm going to have a little bit of a lolook over that one on the weekend, but I was so shocked to see that move in the stock anyway. Moving on to the next point, SP600 and the Russell 2000. What is going on with these indexes? I don't know if you've seen the disconnect between the Russell and the S&P 500. A lot of the smaller companies and the big companies at the moment, you know, the S&P 500 hasn't really been hit that much. You're looking at the S&P 500, and you know it's down for the year. It's actually down 1.6% for the year, which is absolutely crazy to see the disconnect. The S&P 600 is down 1.6%, and you look at the S&P that's up so much. It's absolutely crazy, the disconnect. And the Russell 2000 as well. The Russell 2000 is only up 1.2%. And you're looking at the valuations. I mean, if you look at the forward P earnings on the S&P 500. You're about right for the S&P 500. You know, it's about where it should be. which basically means the S&P 500 is looking quite fair value at the moment. And obviously, the thing with the S&P 500, it didn't really have much of a dive. You look at like the likes of the S&P 600, for example, this really peaked out in March 2021 time, not December time, and has been down and not really recovered. So I'm looking at these sort of stocks and you're looking at the valuations. I mean, the S&P 400, which is the mid caps, that's basically near historical low PEs right now, around 13. The S&P 600 is even cheaper at 12 times. I mean, the S&P 600 at the moment is about, on a forward PE basis, near the levels of the '08 crash, which is just absolutely crazy. It was even lower at one point, apart from the little bounce up that's had recently. But I mean, it's absolutely crazy how low these two are. And I'm not really an index guy. I obviously, you guys know I like my individual stocks, but even as a stock picker, I'm looking at these indexes going, these look quite tasty at the moment, and it's something that I'm looking at the moment. So I thought I'd just point the disconnect that's going out at the moment of the S&P 600 and the Russell 2000 and how low value these currently are at the moment. Look interesting. Next stock I want to talk about, S4 Capital. S4 Capital obviously was a stock that I bought in 2021. From when I bought it, the stock went up good amounts. The stock was up 53%. Got into 2021, the back end of 2021, when the crash happened and it got absolutely devastated. Obviously, the worries about a recession, marketing being cut. There's a few other things in there as well, like overhiring and a profit warning that was in there, and audit being delayed, which has since been resolved. But that combination of all those factors basically put it down to a stock that was actually, the lowest it's ever been, lower than where it came onto the stock market. It was lower than the CV times, and then you look inside the company and the progress they've made, and you're like, does it really make sense to be that low? And then it finally had a bit of a reality check. The stock was ticking up nicely through February, and actually when it got to the point in February and it had a 73% rally, I was sitting about break even at this point, and I was thinking, for me, S4 Capital is one of my big positions. It is my biggest position in my UK portfolio, and I was thinking, is it time to just rebalance a little bit? And I thought, I'm looking at it now, even at the levels that it was at, thinking about the future, how well it's doing financially, even during, a marketing crisis at the moment and this recessionary environment. I thought, I still can't sell it. But then from that point of view, from around about that February time, the stock has taken a 41% dive, and it's now nearly close to where it was at previously. These times in, this big fear around 2022 and the fear of the inflation and the marketing spend cut, and you're looking now thinking it's stock that's so disconnected what's going on financially, and I'm trying to identify why this stock is kind of coming down. And I don't know if you guys remember, but it came out that on the 7th of February, which actually ties when the stock actually started going downwards, which would make sense. The Martin Sorrell, which is currently obviously the founder, the CEO of the company, went in for keyhole surgery. For me, it wasn't a big issue really, but obviously it seems like the market doesn't really like it, and I was a bit like, why is the stock reacting so much to that? Now, since then, in the last week, it actually came out that he had cancer treatment, and hopefully everything goes well, and it sounds like everything's going well with that, and it was to remove a tumour. I'm kind of in the camp here now that I'm thinking, well, the stock started going down since it came out that Sorrell did go in for this surgery around here. I wonder if this is a classic case, and it really does seem to happen in the UK markets more than the US markets, but the UK markets and the big investors on the UK market seem to get a bit of information that isn't on the public eye or available to the public as much and as retail investors much. And I'm wondering on the 7th of February whether or not, when we were finding out that he was going in for surgery, that a lot of the big institutions actually realised that it was actually for maybe cancer treatment, and that was maybe why the stock downtrended so much on the back of this news. So I wonder if that's kind of what's going on here, and that's why the stock did drop so much. But even with the drop now and with the treatments going on, obviously Sorrell is a big part of why I bought the company. I mean, he's obviously the CEO, founder. He owns 9.6% of the company. He's probably generally like 50% on the reason why I bought the company, because of who he is, the knowledge he has, the track record he has in this space. So it is a big deal, obviously, but I think it does seem a little bit of an overreaction here to be going this low. Obviously, if there was a succession plan in place, I'm sure they would still do okay from the situation at these levels. Obviously, wouldn't be ideal, but I thought it was an absolute crazy overreaction. And you're looking now, I mean, the company's 0.8 times sales. The company's got 83% gross margins. And obviously the company has crossed the 1 billion range. So they're doing over 1 billion in revenue, more than the market cap, 80% gross margins. And you look at the previous record of what Mike Sorrell has had with this business, the likes of WPP. And a company like this that is more of the legacy advertising, not as good as the digital marketing that currently S4 Capital have. And their gross margins are currently 17%. And you look at the time frame of like 2017, this company was putting in 10% profit margins at that time frame. So you're looking at what the potential of S4 Capital can do in the long term. You're talking potentially that S4 Capital start pulling out, let's say 5% minimum profit margins. I think, easily you could be talking 10%. You're talking 10%, you're throwing off nearly 100 million in profit, 828 million market cap, which is scary, especially when you look at how fast they're growing in this environment. You go back to a normal market and a normal advertising market and how fast they'll grow. Even if you put a 5% profit margin on this, it's scary how low this company is. And I know that there's the little worries there, potentially what's going on in the background and around the health issues, but I think it will be okay. And you look at the valuation inside and you think, well, even with the issues that are currently going on, like, does it deserve to be at these sort of levels? Which is absolutely crazy at the moment. So thought I'd mention that one. Legal in general. So recently the stock's been on a very good run, and then it dropped massively. It dropped down 7%, and now it's back down at 6 times earnings, 8% dividend yield. And you're looking at this one at Legal in General, and you're thinking, well, the reason why the drop happened is because of the ex-dividend. People locked in the dividend, they were qualified for the dividend, and then thought, okay, I'm gonna sell it off. I'm gonna get a lovely, whatever it was, dividend yield at the time, and then sell off the position. And now it's had this drop again. You're thinking even Legal in General's looking a little bit more attractive again after the drop after this ex-dividend day, and looks a very solid, value play. It's one of my boring companies, Legal in General. It's one of those boring companies that I can leave in the background. It shouldn't have too much share price movement. I say that after this drop here. And, collect a really solid dividend from it. And I'm looking at this one thinking after the ex-dividend day going, this could potentially be a little bit of a pickup there. So I thought I'd point that one out very quickly. And the last point, I'm actually going to talk about another YouTuber here. So the other YouTuber is a fellow UK YouTuber, which is Sasha. He dropped a video yesterday, which I thought was really interesting. I didn't hear of this, and I'm surprised it's not getting more media coverage. But he dropped this video here, which he talked about Jerome Powell. And basically, it came out on their version of YouTube, a Russian YouTube channel that pranked to be I think it was like a Ukraine government. I don't know if it was an actual official they were pretending to be, but they managed to get an interview with Jerome Powell, and it shows what they actually talked about. Now, the actual video is supposed to be around, I think it was either December or January time it was set, and it was actually so scary, the process that Jerome Powell was talking about. The things that he was saying was so scary. He was on about, and it wasn't really like the normal deflection tactic that he would use in press conferences. He basically opened up on his thought process, and his thought process was like, well, there was things said on it like, well, the market's factoring already 2 more hikes, so we're probably going to do them 2 more hikes. You were looking at the data he was looking at, and it was scary, like the points of data that he was using. And basically, like, you're looking at how he was making the decisions and the data that he was using to come to these decisions for these interest rate hikes. And I generally looked at it and went, we are absolutely, if he is using that, we are absolutely, the word that rhymes with ducked, if he's actually using that data and that is his logic on what he's going to do on interest rate hikes, I'm worried. I am actually worried. Like, I personally said, like, inflation is coming down rapidly. We're going to hit 3% soon. We could potentially hit 2% by the end of the year. My big worry for if the market rallies or not is with this guy, because I don't trust him. I don't trust he's going to make the right decision. I think right now interest rates should not be getting hiked anymore. Inflation is a lagging indicator and doesn't show the true extent of what inflation is going to be coming down at. And if he's going to seriously hike up interest rates next week, we have a major issue. He should not be doing that, and that's going to put more and more pressure where we enter a recession, and we could potentially enter a recession when we should not have a recession because of this guy being very slow to do things. He was slow during the CV times. He was slow, when he was giving, money handouts, and the checks were going out and they shouldn't have been going out. And how slow interest rates stayed at so low levels when they shouldn't have done. We had interest rates at so low levels when we had a decent economy, and they should have been coming up. And when inflation started coming up, interest rates should have been following them a lot quicker. And it looks like he's going to be once again making a terrible decision. And listen to the data he's using and his thought process. Interest rates are going to continue going up for a little bit more, and that's scary because it shouldn't be happening. And this guy here could generally wreck the economy, and he could generally wreck the rally that we have in the stock market. And that's been my biggest concern for a long time. My biggest concern is that this guy does not know what he's doing, and he's going to make the wrong decision. And it sounds like he's going to do that. So do go check that video out, because the information that was in there was, honestly, I was like, I can't believe it. Like, this is actually scary if this is his thought process. And we'll have an idea next week, but it seems like what he's been saying and what his thought process is, what he's been saying to us and what he's actually going to do is totally different, which is scary. So yeah, go check that out. But I thought that would have had more media coverage, and the fact that this came out, I thought would have sent the markets a little bit lower on the back of this news, and it would have been more talked about anyway. So yeah, worth checking out. But that was the worst news that I've heard for a while for relating to the stock market, that put me a little bit like, oh, that's not good. So yeah, thought I'd mention that as well, because it's definitely worth checking out. Anyway, so a couple of stocks there for you guys, and a little bit of a talk on the Fed anyway. So hope you enjoyed it as always, and if you could hit the like button, that'd be absolutely amazing, and catch you in a bit.